Well, let's begin with Iran, where President Raisi presented an upbeat state budget that aims for 8% economic growth. The budget is also eyeing increased crude oil sales of 1.2 million barrels per day despite continued U.S. sanctions. World powers and Iran, they were locked in talks this week on reviving their 2015 nuclear deal and lifting U.S. sanctions, with Britain and Germany warning that time may be running out. The fiscal plan for the next year overall, well, it starts on March 21st and it was drawn up on assumption that U.S. sanctions would continue. In November, imports of Iranian oil by its main customer, China, were estimated at over 500,000 barrels per day. An Iranian estimate of total exports have been as high as 900,000 barrels per day. Reports say value of nominally balanced budget at 15,000 trillion riyals, which is equivalent to $50 billion at free market exchange rate of Iranian currency. Well, the new budget is about 10% bigger than current budget in local currency terms, although its value in real terms is lower due to annual inflation, which is running at more than 40%. The budget allocates about $5 billion to strengthen Iran's defense program. Analysts say Iran's economy and its recovery is likely to be modest should it revive 2015 nuclear deal without expanding scope of pact. The US reimposed sanctions, crippling Iran's economy by driving down crude sales. Islamic Republic's main source of revenue is crude, and after Washington withdrew in 2018 from nuclear pact, this was a big problem. The draft budget has to be passed by Parliament and approved by a clerical body that vets legislation before it becomes law. WION now available in your country. Download the app and get all the news on the move.